This is The Bottom Line. The Bottom Line on 938 Live.
Now, the Urban Redevelopment Authority, or URA, has just released its final property data for the third quarter. We have on the line with us Chua Yang Liang. He's Head of Research for Southeast Asia at JLL Singapore, and we have him to get his analysis on what the figures mean. Now, Yang Liang, the final URA data for Q3 came in just a 0.1 percentage point lower than its earlier estimate of a 0.6% drop in private home prices. Were you expecting this?
Yeah, generally, the final numbers and the flash numbers, the variation is very limited. So this is within expectations in the market.
Right. Now, prices of private homes have been falling for a year. Do you expect the trend to continue? And if so, what is the range you think it's going to fall?
Sure. But if you look at the transaction volume, that statistics have been falling for quite some time. It's only recently that prices have been falling. So going by that, likely this trend like continue to the year end, and I think by the fourth quarter you could expect another 0.5 to 1% decline on a quarterly basis.
Right. Now, the prices of homes in all market segments have declined, with the core central region as the biggest decliner. Why is this region now the worst performer?
Well, it's really because of two reasons. The core central region largely are driven by foreign buyers because the price line is pretty high. The average Singaporeans are unlikely to support. So with that, given the community policies that we have today, the government policies that's in the market, both foreign buyers and locals are not supporting this market, hence the kind of performance that we are seeing right now.
I see. Okay, let's look at the office space segment now. That prices rose there 1.6% after remaining flat in the previous quarter. Why are prices in office properties now moving up?
Right. If you look at the market, the office market as a whole, prices have rose really on the back of rising rentals. And given the interest rate risk that we are seeing in the mid to long term, where the US interest rates like to rise, yields over here in the Singapore market is like to rise alongside. Hence, capital values has risen about 1.6%. And in the rental market, you've seen a growth of about 2.6%.
Right. So, okay, looking at office leasing market, rentals rose 0.6%. What's your sense of the segment moving forward?
Well, the rental growth of 2.6% is likely to maintain, given that there is a very short-term supply mismatch. Demand is coming from a large, very broad-based recovery demand from the market. We have occupiers from all segments of the industry, as in office industry. So it's likely to continue in the short term. But with the impending supply that's coming in 2016, rents are likely to soften by about that time. But meanwhile, rents are likely to continue to rise moderately.
All right, Chua Yang Liang, thank you very much. Head of Research for Southeast Asia at JLL Singapore on The Bottom Line. And The Bottom Line is brought to you by Turkish Airlines, Europe's best airline.